All right, guys, what's up? Michael Edward here, guys, head trader at True Trading Group. Welcome. Sorry, guys, we had a little bit of technical difficulty trying to get the live stream up and running. All right, so I do apologize for the little technical difficulty that we had there. But bear with me, we're here now. Javon, what's up? Well, hey, what's up, guys? Yeah, I do apologize. I was trying to get this damn live stream going so you guys can see my screen at the same time instead of me just using the webcam. So I want to do the end of the day recap today on the live stream because it's a really cool lesson that we're going to cover. It has a lot to do with mental lesson that a lot of traders struggle with, and that is how to overcome getting stopped out of a trade early. Meaning you get stopped out of the trade and the stock ends up moving higher without you. All right, that's what we're gonna cover on this video because I made a really great trade in KOD towards the end of the day, but I got stopped out on this trade earlier in the morning. But I was able to kind of keep my head, keep my composure, come back and nail a real strong win to finish the day strong. So it's something that a lot of traders struggle with, and this is what we're going to talk about, and we're going to go over, and we're going to discuss now in this video. Before I get into end of day recap on this KOD trade, as you guys know by now, the Black Friday sale has expired. It's come to an end. So the 25% discount is no more. We're back up to full price. However, for those of you that missed out on the Black Friday sale, or maybe you just weren't ready to take things to the next step, I have a free webinar that I'm hosting that's going to cover 5 lessons that are guaranteed to help get you guys to be more profitable traders. So I'm going to share the link with you in chat so you guys can click on that link and then register for the free webinar. Okay, it's totally free. It's a free webinar. I'm going to cover 5 lessons in that webinar. So if you guys are interested, you can join and go check out and join me for the webinar. Okay, so moving on, let's talk about the KOD trade recap. And in order to do that, let's first go to the daily chart on KOD. So you guys know KOD a couple of days ago had real great news, FDA news. The stock gapped up, exploded, ran like a bat out of hell. And then yesterday you had a pullback and a consolidation day. On this pullback and consolidation day, okay, we had a slowdown in volume compared to the day prior. And then coming into the day today, we had a gap up. We gapped up from yesterday's close, and I started to have this this KOD on my watch list for a potential trade. It was on the watch list in the morning, and I stalked this thing off the bell. And when we broke through the initial morning high, I loved the setup. Right here, guys, is your initial morning high. Okay, it's the first high of the day when the stock experiences a true pullback, and you can see a true pullback. Then we broke through that initial high of the day on a nice little increase in volume. All right, there's your nice little increase in volume as we got through the high of the day. So the next thing I do is take out my Fibonacci retracement levels. Real quick mention on the fib levels. Because of the gap up, you have to draw your fib. The anchor point has to be at the prior day's close. Then you draw it up to the current high of the day. What I started to notice at this point was the initial morning high lines up with the 38.2 Fibonacci level, which lines up with the trade line, which lines up with VWAP, and we were in the process of getting a trade line VWAP crossover. So what I'm looking for at this point on this pullback was a slowdown in volume, and I got exactly that. There's your slowdown in volume on the pullback. So on that pullback, right here, I got long at 56.26. Take you guys to my trade announcements on the day. Here you guys can see my trade announcements. You can see here, long KOD at 56.26. Let me zoom in a little bit for you. Long KOD at 56.26, stop loss the $55 area. Let's go back to the chart. So there's that first entry point, okay? And then as we start to turn the corner and we start to move ourselves higher, notice that the volume never came back in. When you get that trade line VWAP crossover, you want to see 2 things happen. You want to see a strong increase in share price, and you want to see an increase in volume. Those 2 things are going to let you know that the trade line VWAP crossover has significance and is in fact a catalyst for this move. So as we start to climb our way higher, I'm looking at the volume down here, and the volume never came. Look how small this volume is. That concerned me. Okay, so because of that, I decided to sell some of my position right here before we had experienced that pullback because the volume was just too slow. Back to my trade announcements, you can see I took some profit off at 57.41. And thank God that I did, because I ended up getting stopped out of the rest of the position. Notice then we start to pull ourselves back in. We pull ourselves back in, we break below the initial morning high, we break below the 38.2 fib level, below VWAP, below the trade line. And I exited my position right there, back to my announcements, at 54.88. So now I just stopped out of this position. The other thing that I want you guys to notice is as the stock was pulling back in, volume was actually increasing. All of these things are negative. We broke below every single support indicator that is on the chart, and volume was increasing on the way down. All of these things are bad signs. That's why I exited this position when I did. And if you give me this chart pattern 10 more times tomorrow, I will stop out of it 10 more times. I am completely okay with stopping out where I did, because had I held on to this position, I'd have a hard time explaining to you guys on this video why I was still holding the position. There was nothing at this point in time that told me the stock was strong, that told me the stock still had momentum. There was nothing at this point in time that made me feel comfortable holding on to this position. My stop loss was reached. The stock was acting very poorly. It's time to exit the trade. And that's exactly what I did. I exited the trade and I got stopped out of the position. But look what happens later on in the day. So let me circle again. This is where I stopped out the rest of the position, right? Look at what the stock ends up doing. Oh, sorry. Look at what the stock ends up doing. I was furious that I got stopped out on that pullback. Not because I shouldn't have stopped out, but I was just furious that I got stopped out, and now the stock is going $10 higher from my initial entry. This could have been a home run monster trade, but I got stopped out. That is what this lesson is all about. Trader psychology and overcoming getting stopped out and having a stock move higher without you. This plays right into what I'm really excited about. I know I've been getting a lot of messages from people that are excited about the Trader Psychology course that I'm going to be releasing very soon that covers the 80% of trading, which is mental. And this is one of those key fundamental lessons that can completely break down your mindset and can drive you crazy and screw you up for the rest of the day. This is one of those mental lessons that are covered in the Trader Psychology course that is included with your year membership. All the courses are included for free. Okay, so that's coming out very, very soon. This lesson is what I'm going to walk you through now, is the mental part of overcoming this when it happens. Because in the situation with KOD, I don't understand how I would not have been able to stop out of the position. It happens. It sucks, but it happens. Okay? It sucks, but it happens. Oh, sorry. Let me pull this back down. Sorry, guys. There we go. Okay. So it sucks, but it happens. All right? Now, it's important that you understand, after this happens, do not jump right back into the trade. Do not jump right back into it. You have to trust yourself that your stop loss was correct and the stock is going to go lower. Trust yourself that your stop loss was correct, because the majority of the time you will be correct and the stock will continue lower. So trust your stop loss. That's rule number one. Do not just get stopped out and then jump right back into the trade. Because honestly, if you get stopped out and then you jump right back into the trade and it turns out you were right and you should have stopped out there and the stock moves lower, you just turned one losing trade into 2 losing trades, and now you might as well shut your computer off, because for the whole rest of the day now, you're going to be a mental nutcase. You're going to be so angry, so pissed. You're going to start to revenge trade, and you're going to come undone at the seams. You're just going to completely fall apart the rest of the day, and you're going to make matters way worse. So don't just jump right back in. Sit back, take a breather. I was pissed off that the stock continued higher without me. I was pissed off that I got stopped out, but take a step back now and say to yourself, damn, I was right. My analysis was correct. My execution was poor. My analysis was correct. So now you can find solace in knowing that what you thought the stock was going to do, it is in fact doing that. So now it's time to reassess the stock, find another setup, and treat it like an entirely different trade. You got stopped out on one particular setup. Let's zoom back in. I got stopped out on one particular setup, which was, I'll draw it out again, initial morning high. We broke through it with an increase in volume. Fibonacci levels lined up, 38.2 fib level at that high. Trade line VWAP sits at that area also. That was one pattern and one setup. Well, that didn't work out for me. I got stopped out on that. That doesn't mean now you buy the stock right back in here, or even buy the stock right back in here. Don't go after the exact same setup. If you get stopped out of that setup, let it go, because you don't know if that setup is still intact or if you were actually correct in your stop loss. You have to treat it like an entirely new trade. I waited all the way until 2 o'clock to trade KOD again, because the stock started climbing higher during lunchtime and the volume, wasn't really all that great, and it was going into lunchtime. So I'm not going to chase a high of the day break during lunchtime. If you guys follow my channel for a while now, you know that I don't chase lunchtime breakouts. All right. So as we get into this afternoon session, I start to notice something. Volume starts to pick up. As we come out of lunchtime, volume starts to pick up. We just broke through the high of the day right here going into 2 o'clock. So we're coming out of lunch. We broke through the high of the day, and you have a strong increase in volume. So what I did at this point was, okay, the stock is still showing me signs of momentum and strength. It just broke through the high of the day at 2 o'clock, and it got a strong increase in volume. Those two things are signals that the stock still has momentum. So now as I go back now and I say, okay, let's redraw my Fibonacci retracement levels. And what do we see? We notice that the previous high of the day that we just broke through with a strong increase in volume lines up dead even with what? The 23.6 Fibonacci level. So on this setup, I'm saying to myself now, there is my entry. There's my shot at redemption. There's my new trade setup. It's a totally different setup. Totally different setup from earlier this morning. But it's another entry opportunity. And now I can treat this stock that my initial analysis was correct, but my initial execution was poor. I can treat this stock as now an entirely new trade, because that's what it is. It's entirely new setup. It's the same ticker symbol, but it's an entirely different chart. And you have to treat these stocks as an entirely different trade when you get stopped out and the stock moves higher without you. Wait for a new setup in that stock. That's what I did in the afternoon. And on this pullback, right into the previous high with the 23.6 Fibonacci level. And again, my key here to trust this level was the strong increase in volume coming out of lunch for the new high of the day. Without this volume down here, guys, I don't necessarily trust this level. Right there is where I got back into KOD. I'll take you back to my trade announcements. Let's zoom it in. Here you can see at 2:44 p.m., I'm back in KOD long at 64.59. Stop loss, 63. Back to the chart. All right, there's the entry point. We then start to climb our way back up to the high of the day, and my first take profit comes off right in front of the high of the day. Back to my trade announcements. Here you guys can see, took 25% of the position off at 66.70. Then we extended, we made a new high of the day. I took 50% of my position off. Back to the announcements, 68.25 for the bulk of my position. And then we got our extension move going into the close. And right here, guys, my final take profit at $70 on the button. Final take profit, $70. That is what redemption looks like. I got stopped out of this trade early in the morning, took a small loss on it, but the loss isn't what hurt. What hurt was the fact that I got stopped out and the stock exploded $10, $15 higher without me. But you've got to sit back, take solace in the fact that I was right in my analysis. My execution was just poor. Now that I know the stock is in fact doing what I thought it was doing, and I didn't just jump right back into the trade, I waited, gave the stock time to set up and prove to me that I got stopped out and the stock's still going to go higher. And don't just say I got stopped out, I'm going to jump back in and the stock rolls back over anyway. You got to give it time because you have to trust that your initial stop loss was correct. So don't just jump right back in it, because more times than not, you're going to be correct and the stock's going to go lower. So you don't just want to jump right back in. All right? You don't just want to jump right back in. And guys, real quick, you see right in chat, we just posted a link. That link is for those of you that did not take advantage of the Black Friday sale, but want to join my free webinar where I'm going to go over 5 lessons that are guaranteed to make you a more profitable trader. It's totally free. Block out a little more than an hour of your time, and that webinar, I'm going to cover 5 free lessons for you guys. So if you're interested, click on that link, register for the webinar, come in and join me so we can break down those 5 key lessons that are going to help you make you guys more profitable traders. All right. So now as we get into this, back to this KOD trade, it was all about redemption. I came back with a clear mind. I found and identified a new opportunity in the stock and caught a really nice trade. I didn't buy fuel cell, Frank. So I see Frank just asked, why would I buy fuel cell? I didn't buy fuel cell. I'm not sure what you're talking about. All right, so there's your KOD trade, guys. And that's a big win from 64 and change up to $70. It's $5.50 a share. And I was able to, like I said, the morning trade was a small loss because I exited some of the position for a gain when I recognized the volume was slowing down. So it wasn't the loss that aggravated me. It was the fact that I got stopped out and the stock went so much higher without me. And that's a very difficult thing for traders to deal with. And that's why this is a really good lesson, and it feeds into the trader psychology course that I'm going to be releasing very soon. That's included in the TGG membership, and that's why I wanted to come on and do a live stream and share this video end of day recap with you guys, because KOD was a big mover. It's still on my watch list for tomorrow. All right, it's still on my watch list for tomorrow. As you guys can see, we broke above this previous pivot high, and we'll see if we can really get some extension tomorrow. The company did an offering. It was an at-market offering, which is a good sign. There was no discount, no real dilution. All right, so that's it, guys. That's the KOD trade. Does anybody have any questions about this trade or mental questions or anything like a technical question about this? Fire away, guys, if you have any questions. But I wanted to come on and do a live stream with you for this video end of the day recap, because it's a really good trade. I was really happy that I was able to come back and hit this thing, because I'm telling you guys, I was pissed. I was ready to throw my computer out the window. Nice. Great, guys. I'm glad. I'm really glad that this is helpful, because I know this is something that a lot of traders struggle with. I know it's something that a lot of traders struggle with. I know it's something that a lot of traders struggle with. And, the mental part of trading, the mental part of trading is really what separates great traders from struggling traders. It really is. So, what signs do you look for around support areas for continuation? Alex, what signs do I look for around support areas for continuation? I like to see strong bounces off of support levels. So, like as an example, this level, you see how we came down and just kissed this level and got right back off of it. That's what I like to. That's what I like to have. That's what I like to see. I don't like to see the stock sit on the support level like this. Right? I like to see it come down, kiss the support level, and immediately get back off it. That shows me that there's aggressive buying in front of that support level. My fib level started at the same place. My anchor point, Brian, does not change. Your anchor point for my fibs don't change intraday. Intraday, my anchor point does not change. Okay? So intraday, this was the initial setup, but as the stock continues to make new highs, you just continue to draw and expand your Fibonacci level. So at the second entry setup, when I entered the stock right here, my Fibonacci was drawn from the prior day's close because of the gap up to that current high, and that's where you see the 23.6 Fibonacci level lines up perfectly with that previous high, and that's when I jumped in for that entry point, and I caught this real nice extension move in the afternoon. Great. Excellent. Yep, anytime, Brian. Great, Eddie. I'm glad. So like I said, guys, I felt like it was important to come on with such a key, important mental lesson. And, I'm excited because I'm starting to wrap up the trader psychology course. I'm going to have, like 30 or 40 lessons that are all mental based, that are, all about the getting you guys in the right mindset and dealing with the hurdles and dealing with the bumps and the bruises of trading, because it's not always sunshine and rainbows. There's a lot of dark, thundery and rainy days that you have to overcome. And the trader psychology course is really designed to help put you in the right mindset to be a consistently profitable trader and not be so infatuated with making money right now, right here on this very trade. You have to have a longer term vision when it comes to trading if you're ever going to be consistently profitable, and you have to follow certain rules, guidelines, and strategies, and specifically risk management to get there. And there's certain things that you guys may have a tendency or have a desire to kind of break your rules and stray away from, when you need to keep in mind that you don't want to change those rules for one specific trade. You want to make sure that your rules are in place for the majority of the time. All right. Is that why you opt out your shares and percentages when it continues to climb? Also, I've heard of Fibonacci levels. May you elaborate? Well, yeah, Cameron, I tier out of my positions. As the stock is working in my favor, I sell my position in pieces. So when a trade is working in my favor, I sell 25% of my position. Then as it extends, I sell 50, and then as it extends further, I sell the other 25%. So I sell in pieces. And Fibonacci retracement levels it's just a technical indicator, Cameron, that is a mathematical equation designed to help identify common support areas. The technical Fibonacci levels, all the technical indicators, they're all covered in all of my courses that are on the website. Yes, Lunchbox, I would. Yes, I would. If all the stars were aligning and I had another good low risk opportunity to add, yes, I would. Listen, JS Bratton, is there ever a time to buy the high of the day? I mean, it just depends on your strategy. It's not my strategy. That's an aggressive strategy. Entering your position for the very first time on a new high is an aggressive strategy. That's just not the way that I trade. So I might add to a position on a break through the high of the day, but I would much rather get long on the pullback into support and then take some profit at the high of the day in case we double top. I don't get crushed. If you buy the high of the day and you double top or you get a failed breakout, you're very far away from your stop loss, and that's when you can really get hurt. All right. So again, guys, free webinar, five lessons that are going to help make you guys a profitable trader. All right, so we'll put that link in chat. Again, we'll put that link in chat one more time. So if you guys missed out on that Black Friday sale, that 25% discount is now over with, and now it's, you know, a year membership's back up to full price. But I want to make sure that you guys have a chance to join me on the free webinar. So we're going to post that link in chat. There it is. So just click on that link, guys. Just register. It's totally free. Block out like 1 hour of your time, and I'm going to cover 5 key lessons that'll help make you guys profitable traders. Okay, so that's it, gang. Really great trade here on KOD. It's a good way to finish the. It's a good. There's a couple options, Lunchbox. When you guys register for the webinar, there's a couple options. You can select a different time and date. All right, you guys can select a time and date that works. There's a couple different time slots for the webinar. You'll see it once you register. All right. How'd I come up with the stop loss level for the second time, Shane? So the second time, how I came up with the stop loss level the second time is it's right below the support level. So here's the support level. All right, I'll draw it out again. Here's your support level. Okay, it's right around 63.40. Previous high. 23.6, there's the support level. Support level's right there. So I just set my stop loss slightly below it. So there's my stop loss. Jay Vaughn, how do I feel about lower highs? It totally depends, bud. It depends on the setup. I mean, there's some setups that lower highs are great. There's some setups that lower highs are a good sign. There's other setups that they're a sign that the stock's slowing down. It all depends on the setup. I mean, that's a very, very broad question with a much longer answer than just I like them or I don't, because it depends on the situation. It depends on the chart setup and the trade setup. Okay? All right, guys. Great stuff. Thanks for joining me on this live stream. I hope you guys enjoyed the end of the day recap. There's really great lessons in here. I hope you guys are excited for the Trader Psychology course I'm going to be releasing soon. And make sure you guys sign up and join me on that webinar. All right? All right, I'll take one more question. Alex, that's a really good question. I'll take one more. What causes you to add to a tier 2 or tier 3? This is actually an important answer, guys. When you enter a tier 1 position, it's 25% of your desired size. All right. So let's say you wanted to buy 1,000 shares of something. Tier 1 would be 250 shares. You enter tier 1 because you think you see something. That's why you enter tier 1. You enter tier 2 when whatever the reason you entered tier 1 was is confirmed. Let's say you think this level is going to be support. So you enter tier 1, but you're not sure it's support yet. Then the stock makes a strong bounce off that level. Volume increases on the way up. You're like, there's my confirmation. This is support. Now I'm going to add to the position. Maybe you think you see a bull flag. You're going to buy tier 1. When you get something else that happens in the charting, in the price action that confirms, yep, this is a bull flag. You got confirmation now that whatever you thought you saw is correct. That's when you add tier 2. And then you add tier 3 when all the stars align, everything is pointing in your direction, and you're super confident in the trade. And then that's when you just add tier 3. All right? You don't always have to get up to tier 3. I don't always get to tier 3. The majority of my trades are in a tier 2, which is a full size position. Tier 3 is a max size position. Tier 1 is a starter feeler. Tier 2 is a full size. Tier 3 is just absolute max. Okay? So that's it, guys. Thanks for joining me on the live stream. This is a great one. I feel really good to finish the day like this and finish the day strong. KOD is on watch for tomorrow. Make sure you guys join me for that free webinar. Again, 5 key lessons guaranteed to help make you guys profitable traders. And I will see you guys in chat tomorrow, and we'll look to keep this momentum going. Thanks a lot, guys. Take care, everybody. Have a great night. See you guys later.